myself, they call me J.O. N to the easy E. Know that we undefeated.
Know you're going to be super excited for the next one. He's got over 650,000 followers on Twitter, and he's discussing 3 winning strategies for how to play the crypto recovery this year. Please welcome to the stage Adrian Zjunchik. He's a chartered market technician and founder of the Birb Nest.
Check, check, check. Can you hear me, everybody? Yeah, cool. How is it going? How are you feeling today in London? Good, perfect. All the good mates. Listen, before we roll to talk about crypto, I want to, ask you to do me 2 favors. Is that fine with you? Yeah? 1. I want you to give a round of applause to the organizers for organizing and hosting this magnificent event. It's not easy to pull this off together. Big round of applause. And the second one that just follows right after is that I want to congratulate you and ask you to give a round of applause to yourselves for surviving the bear market of 2022. Give it up. Yeah, as easy as it goes, my name is Adrian Zjunchik. I am a chartered market technician, the only one holding this title in my country, which is perhaps significant a little bit, because I'm going to talk to you about the 3 winning strategies for crypto recovery in 2023. Let's give it a go. By focusing on winning strategies, what does it really mean that it's winning? Does it really mean that it's going to have endless winners and not a single one loser? Well, the answer is that it doesn't mean so. In fact, it means that we as traders, in the real world, we are dealing with uncertainty for the wins and the guaranteed losers. It means that the losses are inevitable and the profits are hard to create. And this is the real world we are dealing with. And luckily for us, we have this excellent tool that is called technical analysis that provides us with a toolkit to manage the risk. And if it follows the definition, it's about a price study. It's about an art of reading the market to serve it well in your favor, to, put a little bit of your exposure, capital exposure, when the times are good, and just withdraw, back it off a little bit when the times are bad. However, what technical analysis is not, which I always repeat and highlight, it is never a 100% guarantee win. It is not resistant to market manipulations. It takes 1 tweet from Elon Musk to basically pump Dogecoin. Isn't that right? It's not a crystal ball to predict the future. It's not a set of squiggle lines either. However, it follows a very important principle, an existence of something that we call trends. Trends are directional price movements which tend to persist. And this persistence is very essential because it lets us classify trends in terms of the categories for the primary trends, such as bull markets, bear markets. It also helps us understand the secondary tides that are the medium-term kind of like movements within this overall uplifting or, declining regime. And depending on which kind of study we do apply to it, be it Dow theory or elite waves, we can classify those even further and deeper. However, what's relevant is that if we want to put ourselves into 2023 context, we cannot forget about what's happened right before a moment. Because 2022 wasn't good. And I asked you specifically to give yourself a round of applause because it is a magnificent achievement and milestone unlocked for yourselves. Some of you may not even be fully aware of it, but it's really big. This was the constant alignment of very, very bad odds. And we're talking about the bear market. We're talking about midterm seasonality in what regards to United States elections that brings very often this slashing and declining performance all across the world with 66% overall reading from the start to the bottom of 2022. That was the Bitcoin chart, including the 200-day moving average, which for the most of the year just declined stream. Very, very simple way, yeah? We came to the reality of Russia-Ukraine war. We've seen also biggest projects such as Terra, Luna, and tons of others collapse like it's nothing. We're talking about the glorious or inglorious, infamous FTX situation that so many people lost money. How many of you lost something on the FTX? Raise your hand. Only one person. That's interesting. That's interesting. Okay, good. I mean, it's not good. However, typically it's about 70, 80% of the people that would just raise their hands. It was very difficult not to lose a single bit on FTX in all those situations, including the inflation, which was galloping, which was very hard to be tamed, and is still at the elevated levels, well above the multi-decade historical highs, be it for the overall European districts or the United States. So that's the reality we are heading with into 2023. So the odds were not good. However, and just maybe, we are about to see some light at the end of a tunnel. We are still facing recession risks, with the top two-year performer being straightforward led by the energy sector of the S&P 500. The energy prices are really high. The energy prices is exactly what led many, many restaurants, pubs that you guys love so much, and all the places to, well, wind down and just finish off. That's not good. However, there's a significant slowdown in the overall trend and directions of the energy sector, which just maybe will help the market rotate to the downside, freeing up capital and leaving more money in your pockets. I hope you're right with that, yeah? More money in your pockets? We're talking about the overall recessive signals that just popped up, and there were plenty of those. We're talking about 2 consecutive months, or quarters, I should say, about declining GDP, real GDP. That was the situation in states. We're talking about the 50-year highs, or should I say disparity, in terms of the disparity, the deep curve inversion, unseen since 1980s. This is the reality we are in. And those signals historically preceded recessions. Doesn't mean it's going to follow through just like the old times. Well, there's no guarantee about that. However, is it worth to trade counter those or ignore those signals? Luckily for us, the financial cycle, the markets, such as cryptocurrencies as well, drive the economy into good times and out of the bad times. And luckily for us, we've seen what otherwise looks like a market bottom, the major market bottom following a long year bear market, for the stocks, for the S&P 500, as well as for Bitcoin. We've rotated higher above critical essential thresholds. For Bitcoin, it aligned with $20,000, putting this overall context a little bit better for 2023. So speaking of forecast, we are looking at what looks to be the 5th bull market start. Just it. Very, very gentle touch, very small, innocent break to the upside that historically had preceded bull market burst every single time. So again, no guarantee about the future. However, would you dare ignore that? So why recovery? Again, pre-election years. Following the midterm bear market, typically the pre-election years, at least following this excellent work of Stock Traders Almanac for this year, which was pretty magnificent read, comes with a bunch of seasonal patterns, and one of those is that the pre-election years are the strongest years, especially if they come after the bear market, in any history. Since over 84 years, only one time the pre-election year lost. Then we are talking about the January barometer, which you might have heard of, which says basically that as January goes, so goes the year. And it has an established 83.3% accuracy ratio over 72 years. So those are the odds that you are faced to make a decision you want to follow or trade counter. So of course, there's no guarantee about the future. We don't know about what the next day's prices will be. Same way we don't know what the next day's weather or temperature will be. So, if in 84 years only 1 year was losing, then it's a little bit of a parallel and a similar situation analogy for you to make a decision whether you trade or, well, bet against positive temperatures in the summer. The average temperature in the summer from what I know, I may be wrong about that, is about 20 degrees, maybe? 20 degrees? 15, 20? Let's bet it like that. So if that was the seasonal pattern over the last 84 years, would it be wise to bet on negative temperatures all of a sudden and assume the market rotation, assume the temperature rotation, trends reversals? Well, I'll leave it for your internal answers. We're talking about halving, which historically has driven up the next phases of the bull market because it builds the digital scarcity fundamentally and drives the mining difficulty, drives the overall demand. When there's less of it, you typically want to have it more. So that is the reality while talking about winning strategies, because with having this prelude, we're talking about 3 candidates that I personally follow. And this is trend following. I'm a trend follower, which means that trend is my friend, and I would not dare trade counter 84 years of data speaking in the good favors. That's what I do. I may be wrong about that, and once in a while I will be. In fact, most of the time I will be wrong about losing. However, the losses are kept small. Because I trade trend breakouts, which means that there doesn't only need to be a breakout to the upside or to the downside out of certain like sideways environment, it needs to be backed in terms of the direction. And it's as simple as putting and laying over 200-day moving average and following the direction. For 2022 time, it continued to decline. And you can tell that where the red arrow is, it kind of like rotated. It changed the regime, it changed the shifted. And we used this so-called confirmation principle, well, consisting of confirming this in terms of breaking critical levels from the technical point of view, such as support resistance lines, which you might have heard of. It needs to drive certain percentage of price in one direction to consider it also valid. It needs to be backed by volume. However, it's not necessarily always relevant or needed, especially in the emerging markets when the volume is typically low. It should come up and be backed by the overall breadth improvement, how the overall total market performs. It's good if it's backed by the volatility and time. And luck has it for us this year that all of those factors have been met for Bitcoin already. So that the overall conclusion is that the trend has shifted, that the trend has reversed. We don't know the future. However, we know that the trend has changed. Another winning strategy that is backed by 212 years of historical records is the best preserved historical record of investing. It's momentum investing that relies and is based on relative strength. And its roots in momentum principle, which says that the outperforming assets will continue to outperform and the underperforming assets will continue to underperform, because it assumes existence of this internal impetus, often driven by behavioral biases by the way we react, that is reflected in the price, that often makes us act irrationally and drive up the prices elevated higher, way above any readings and way below any readings out of fear. And this principle suggests that you long the strength and short the weakness, that you don't oppose to those forces. And so that you can track so-called risk-on, risk-off environment by comparing the securities prices for the XLY, which is consumer discretionary, driving the cyclical market nature, and the defensive side of it, which is coming from the consumer staples. And ever since 2023 started, which was the bottom, it shifted strongly and persistently to the upside, showing the new trend ever since 2023 started. Another excellent tool for tracking relative strength and relative momentum is created by my excellent friend Julius de Kampenauer, the author of so-called RRG, relative rotation graphs. And you can tell that there is a little bit of rotation going on. The tails are curving towards the upper right corner of leading quadrant and towards, on the lowest side, a lagging quadrant. And the momentum principle tells you that you want to be long, you want to be overexposed or exposed well, overweight in your portfolio towards leading quadrant, and underweight, short or underweight on your portfolio about lagging stocks. So this comes with conclusion that there is an ongoing market rotation. And the third winning strategy is by searching the outliers. This comes by learning the crypto market breadth with the percentage of crypto coins trading above 60% in total above their 200-day moving average, above their primary trends, which means that only 40% of the coins are still in their own bear market. This is a significant shift from the 5% at the start of a year. By tracking top-performing assets, or finding those new sweet spot narratives, such as gaming NFTs, metaverse, DeFi, new narratives, this all comes to help you learn about the trends, so that the year-to-date leaders are coming as DeFi, as gaming, and as Zapdos ecosystem. This may change. However, this year-to-date leadership is what it says in here. So putting everything together, we know that the trend is our friend. This is the first winning strategy for this year. Following the trends, not opposing those 84-year records of data. UMT portfolio, which says about this momentum investing, that you want to long strength and short weakness, and you want to keep searching for those new outliers, and it needs to be sprinkled with a little bit of patience. So before we wrap, one famous quote from my favorite all-time investor. One time, this gentleman said that the best investment you can make is an investment in yourself. The more you learn, the more you will earn. And that's where I wrap my presentation. Thank you so much.
Now allow me to